Hello, crypto cats. My name is Tom. I'm the crypto investor, and it's time for our weekly market roundup. As ever, we start with the heat map of the top 100 tokens in crypto, and you can see that it's disgusting. We are down 10% overall with the big blue chips. Ethereum down 10.5, Bitcoin down just over 10. Most of the L1s also down around 10% on average. AVAX, one of the winners really for the week by only being down 3.9%. Clayton 5% up. And you can see also that the stablecoins are now a bigger share of the market. The L1s used to be down here, but the safe haven of stablecoins is meaning that is an inflated part of the market share now. So when we look at the bubbles, I mean, nothing really to report here. Just a load of red snowballs, miserable. This is the Eth Burn, and you can see that overall the issuance offset is down. You may have noticed that the gas is cheaper at the moment. Generally, network activity is down a bit, but also we're seeing the L2s coming into play more and more, and so that's taking up some of the bandwidth from Ethereum. There's a few nice new features on the ultrasound.money website that I quite liked. I mean, first of all, like we can see 43% the way towards the flippening of Bitcoin, but I like that they've now included gold and the US dollar on here, so quite a long way to go. But hey, working on the eventual flippening of these different total assets. And this is looking at the race to become the most desirable money. You can see that 8% of Ethereum is locked in DeFi, 7% is staked, and this is how much here has been burnt. 1.8 million of the total supply of Ethereum, so around 1% or so. Yeah, quite nice little features there that they've got going on. All right, so let's just jump into why things are so bad. Well, first you can see this is IG Index, a little trading company in the UK. They have the weekend Wall Street for people that still want to be able to trade TradFi when the markets are closed, and you can see that they have the markets down 0.5% over the weekend. It's not it's not desperately accurate, but it gives you some indication of what the sentiment is. Of course, more and more concern about the macro environment that that Russia is set to invade Ukraine at any moment, and it does look increasingly probable. Ukraine calling for a ceasefire. There is more and more tensions flaring up in the over in the west of the country at the moment. There has been talks of shells and such. Anyway, of course, people, what they do when this happens is you move away from risk assets. You choose to invest your money in assets more like gold and keeping money in cash and bonds. You don't look at growth stocks and cryptocurrencies, and so this weighs heavily on asset classes like crypto, of course. Interestingly, this week we've seen the Ukraine legalize Bitcoin and other cryptocurrencies. So interesting game theory this, and we've also seen, of course, this was what Russia did a few weeks back as well. And one of my concerns that I hold is that when it comes to economic sanctions, I mean, you can see that the UK are talking about banning the Russia from transacting in pounds and dollars. And one of the criticisms of cryptocurrencies is that it makes it harder to place economic sanctions. And so I worry that may become a rhetoric as this situation develops, that Bitcoin and cryptocurrencies do need to be controlled because we can't place economic sanctions on tyrants like Russia. So who knows, but that's just one of my potential takes. Interestingly, this week you may have seen that Trudeau overstepped his mark significantly and went full dictator on the truckers in Ottawa and opted to freeze their bank accounts. Really quite surprising, overarching response from him. But of course, this is good for crypto. Many people, if such a minor event can happen in one of the more stable and better rated democracies on the planet, then what can happen in other countries or for larger events? And so this has many people talking, and this is a win for cryptocurrencies, really. And so just quite a surprising situation in Canada, and wouldn't be surprising if this actually became a catalyst for cryptocurrencies. We will see how it develops, but there is talks of some kind of run on banks. I haven't seen really to what extent it has developed there. This is a cool chart. We looked last week at the Nasdaq versus Bitcoin, and you can see this is over the last 7 years. This is Bitcoin versus the Nasdaq, and you can see even though the Nasdaq has been up and to the right, when its value, when you look at Bitcoin versus it, it's even more up and to the right. And so if you are looking for an asset that outperforms, then crypto is basically the better place to be. And one of the things I think we may see, of course, we have two big macro headwinds: the tensions in Ukraine and the Fed having to raise interest rates to ease inflation, and that is going to be happening in March. But if you look at these tightening phases where interest rates did increase, you can see that overall the S&P strengthened over 7 of the 8 of these events. And so it doesn't necessarily mean that we are going to see the markets capitulate. And for many people, actually, that clarity could be all that they need for the markets to come back up. It could be a sell the rumor, buy the news event. So I'm just waiting and hoping expecting that we actually get that kind of response, because the market has already sold off quite considerably, really. This is a nice post, I'll link it below, from Danny Balder-Strauss about basically understanding risk and dealing with volatility. I always say that volatility is the price of participation that we all have to pay into the markets, and stomaching and living that volatility, that's what it costs to get high returns. And there's some excellent posts here. Talking about the different moments, of course, in a cycle. I think right now you have fractals of this within it, but I think we're in that kind of fear and desperation, panic phase right now, probably close to capitulation. This is when many people will be shaken away from holding their cryptocurrencies, and so just reading this, understanding the psychology is important. I'll link it below. There's some particularly ones that I like. I always say that timing the market is better than timing the market. This is a good example of that. And the if in doubt, zoom out is always very effective. This is the market in days, months, years, decades, and that's where your focus has to be. If you're judging your investment on how it's performing over days or months, then generally you're not going to make it. We have to zoom out and look at the investment over these broader time frames. It's so much easier to be right with these broad brushstrokes of long time frames. All right, so Colorado have said that they can accept tax in cryptocurrency, which is cool. This is one big catalyst that we have this next week, that Biden is issuing an executive order on regulating cryptocurrencies. So we'll get more clarity on that. And again, it could be a sell the rumor, buy the news. Once we have more clarity, then there's so much money waiting to invest into the crypto space, but they need that clarity in order to proceed. So we're expecting there will be further regulation on stablecoins, just waiting to see what that will be. Illinois submits a proposal for $160 million in tax breaks to attract Bitcoin miners to the state. So different states acting very differently to the Fed on this. This is a airdrop that I did this week to the tune of $2,000. If you have transacted at least one Ethereum or trading volume on OpenSea, then you can probably claim this one too. To claim it, you have to have 5 NFTs that you can put on this site. When you do that, you receive 1,000 of their tokens. So yeah, at the moment that's worth $2,000. So it costs, it was for me $200 in gas, 20 minutes of my time for $2,000. So if you have some NFTs, I encourage you to go to x2y2.io and post your NFTs and claim your free $2,000. Pays to be in crypto. All right. Talking of regulation, so BlockFi have been handed a $100 million fine for basically, the SEC have said, for misrepresenting the risk in their interest products. So, but many people again are looking at this as a positive. Now that we have this this ruling and regulation in place, it means that we now know what other crypto banks effectively can do to to function in this space. And so it gives us a legal framework and opens the opportunity for more and more companies potentially to be operating in this space. Now they know the legal framework to operate within. Victoria's Secret are heading for the metaverse. They've put this patent for, I don't know what it is, digital bikinis or something. Virtual undergarments. There we go. Look, we've made it. JP Morgan, they're jumping into the metaverse. What are they doing? They have a bank in Decentraland that you can go to. Bizarre. And I quite like this. So Bankless have a academy where you can learn about crypto, you can explore these lessons, you get a POAP token for completing them. And it just is a interesting takeaway that potentially the universities of the future or qualifications of the future will be with POAP tokens. You will have to show categorically on the blockchain that you completed X course, then you received said POAP token. And what better way to prove that you have that education than an irrefutable token on the blockchain as an NFT? And I imagine that's how it will be. You know, to apply to jobs, you won't be able to get past first steps unless you can add in these NFTs to unlock access to said job. Anyway, just think it's kind of interesting. All right, jumping into the charts. So we'll start with the Nasdaq, and you can see that we have closed the week lower than last week. Again, nasty shooting star, and this really has correlated with the rising tensions in the Ukraine. Again, looking like it could dip further here. It really depends on the geopolitical risk and what is happening there. We're now top to bottom down 17% in the stock market over the last 84 days, the tech stock market. And this has been leading the way for cryptocurrencies. We're seeing the same kind of correlation to this. What is doing the opposite, though, is gold. I know we don't normally talk about this on the channel, but it's worth mentioning that it has broken out after being in this sideways consolidation for 580 days. Gold has finally broken out of this kind of pennant formation it was forming, and we could see gold run now, again, depending on the geopolitical situation in Ukraine. But it's closed right at the top of its session. I imagine it will gap up on the open tonight and could really start to run if it can get over 1960. But interesting to see that. And it's interesting to see that Bitcoin is functioning more as a tech stock than it is a safe haven. So it's not really functioning like gold still. It's moving like tech. All right, so looking at the total market cap of crypto, we were looking all right. We were up at 1.9 trillion, and we turned back around and lost 15% over the last four days. And looking like it's going to be a nasty close for the week, and potentially that we will go lower again, all down to what happens geopolitically. I feel like we maybe have more pain ahead of us. When we look at Bitcoin, it's exactly the same. We were right at the low of the session at the moment. And it's almost uncanny to what we saw after that sell-off in May. I did this a few weeks ago, but if you take a copy of that move, it's almost the same. That we have that relief rally, then we come down, and then we recover. So I wouldn't be surprised if we see something like that unfold. Let's take it from here to here, because then it looks nicer, doesn't it? Probably something like this unfold. So let's see how it pans out. I think for me, if we were to break 30,000, then I'd start to be quite concerned. But right now, I think we most likely will still bob sideways for some time. And overall, does war in the Ukraine lead to less consumer activity? I'm not so sure. It's more that it could be the first of the first block removed of an unraveling globally of economies and how they are connected, and leading to something bigger. But on its own, I don't think it is too big a concern, really. I think it's just what it could lead to that scares people. All right, looking at Ethereum, you can see that we failed to get above that critical level of 3360, 3,360. We've since come back down. We are coming into some support now. But we're still in this downward channel. We were in an upward channel up. We lost that, and we continue to look quite weak. And I wouldn't be surprised if we see this come a bit further down and have another retest down here of 2,300 or so. And again, if we break there, then I'll be a bit more concerned. But right now, I still see a kind of continuation of this fractal that we saw in June, personally. But don't come to me for technical advice. I'm more just kind of saying what I see on the charts, to be honest. There are much better people out there for your TA. Looking at Bitcoin versus Ethereum, again, we're still very much in this upward channel. As the market looks for less risk, they will move from the likes of Ethereum to Bitcoin. So, of course, we always see when the market's going down, Ethereum selling off a little bit more than Bitcoin. But it's coming to an inflection point, you'd agree here, that this next week it really is shit or get off the pot for Ethereum versus Bitcoin. We either lose this or we break out and start to move up here. So it's getting quite an interesting point. This has held, this is a really strong support line. You can see once resistance is broken and flips to support, and you can see that has been the case really for 2 years now. Past resistance turns support. So I would expect this to be the stronger of the two, and that we would see a break and head to the upside here, personally. Looking at DeFi, continues to look very nasty versus the US dollar, just in line with the rest of the markets. Metaverse, also looking at its lowest close versus Ethereum since November. DeFi versus ETH. Is that a green candle? Can't be. Maybe just slightly green for the week. And then looking at Bitcoin dominance, we'd sit at 42.6%, down slightly for the week, surprisingly. I guess most of the dominance has gone into stablecoins. I will include them. I'll include the major stablecoins on here to add that for next week, because I imagine that's where it must be going, because it's not really going into Ethereum. Ethereum's dominance is down. Solana's dominance is up for the week, but trending down. Luna's dominance just slightly up for the week. Link's dominance, again, just slightly up for the week. Phantom continues to bleed out. Near continues to bleed out. Matic dominance dropping for a 5th consecutive week. Avalanche dominance must be up. Let's have a look at that. Avax.d. Yeah, Avalanche dominance up for the 4th week in a row. If you don't have some Avalanche in your portfolio, then you really should be considering adding it, in my humble opinion. You can see that it is continuing to strengthen, and we are in an upward channel in dominance of the total market cap. So let's just take a look at the Avalanche chart. I mean, 2 horrible shooting stars. Look at that. That signals further downside, to be honest, versus the US dollar. But Avalanche versus other cryptocurrencies is holding up well. Okay, that is it, Crypto Cats. I hope you found that useful. I'm just a guy on the internet. This is not financial advice. If you do enjoy the content, please press like and subscribe. And I'll speak to you next weekend. All the best. Take care. Cheers. Bye.